An accountant's advice that should benefit any business owner. Follow my video and I'll explain more. If you're new here, hi, I'm Michael from MDH, your business growth specialist. Click subscribe to follow our weekly videos to boost your business success. Now, your accountant wants you to know every single one of these, but you've been too busy to ask. Follow my 4 points that every accountant wants you to know. Understanding your figures in the accounts. Now, ultimately, the accountant doesn't expect you to have AAT, ACCA, any type of professional training where you are an accountant. None of them. And that's why you get an accountant on board, otherwise you'll be doing all of this yourself. But there are certain parts of your accounts where there'll be certain key figures that are really important to understand. Now, I've got clients in our firm that love to know the deeper meaning of everything, and that's fine. I'm in a service-based business and we're here to deliver value to that customer. And if they want to know the detail, they'll get the detail. But most businesses have a few key numbers, and some of them will be financial numbers from your accounts and non-financial numbers, which are normally customer driven, that will be best for you to know. So what in your business are key numbers that you should know with your business that would help drive it forward? Because that's what your accountant would love you to know. The difference between a P&L and a balance sheet. Now, again, most small business owners have had no accounting training, and they shouldn't either. When you're looking at a set of accounts, there's two key statements. One of them is a profit and loss account. So if you follow any type of sport and activity, this is your scoreboard. This shows you how much profitability you've got within your company, and it will look through income, direct costs and overheads to get to that profit. This is your scoreboard on how well you're performing within a range. And you may look at a profit and loss account for a month, you may look at it for a quarter, or in a set of accounts that you'll file with Companies House, this will be a year. The second part is a balance sheet. And a balance sheet is the same way if you took a picture where you went and you took all of your assets and all of your liabilities at that given time, that will show you your net worth. So you take all of the stuff that you've got in assets, all of the stuff that you've got in current assets, less all of your liabilities, your long-term liabilities, the net of all of these will be how much you're worth. So if you packed it in and called it a day, you could say you could walk away with X amount of money. But sometimes people have negative balance sheets and they will have more liabilities and more assets, which there would be some form of shortfall. So with these two statements, they're really key to understand. You can get deep into them when you start looking at ratio analysis, but all you want to look at, all you want to take on board straight away is your balance sheet, is your assets less your liabilities, your net worth at a given point of time, and your profit and loss account is your scoreboard, the same way that you would have at a sporting event. The difference between cash and profit. Now, when we was all growing up, all of our parents and our teachers and everyone around us talked about looking at in your bank statement, what's coming in and what's coming out. And I can remember Mummy Hemme saying to me, Michael, don't spend more than you've got, and make sure you accumulate and save some money. I will always remember those statements from Mummy Hemme. But in accounting terms, accounts are done on accruals basis. So that's not when you physically pay for it, it's when you're entitled to it. So the easy way to put this in layman's terms is invoice date. So if you've made a sale to a customer, the sale gets recorded on the invoice date the moment you give that invoice to the customer, but they may pay you 30 days after that invoice, which is fairly standard. So you will have the same with costs as well. So you'll do your costs based on invoices rather than physical payments. And that can confuse people because we've spent X amount of decades growing up looking at our ins and outs and our bank accounts, and we're told to do this slightly different. So this in accounting terms is known as accruals accounting, which all accounting businesses are prepared under. So what you need to understand is what is the movement of cash in between your invoices and when the money comes into the bank. If you suss this and you really get to understand how this operates in your business, you will see your business propel massively, because then you won't walk over landmines and you won't accidentally pick up grenades that go where you've got cash flow dyers. Because even some of the best businesses that I work for at the minute, the moment they have cash flow issues, it drains the life out of them in the same way that a Dementor would in Harry Potter. Why is the money not in my bank? This links to the cash flow element part of it. Accounts are done on accruals accounting, and you're going, where is the money in my bank? But the other big black hole that small businesses have within their business is the director or the owner taking loads of money out of the business, which has a massive overdrawn director's loan account. This basically means you've taken all your dosh out of your business without it currently being declared as a salary or dividend, which would need to mop up that overdrawn balance to then make it neutral again, or if not, that the business owes you. So when you're looking at what is the difference between profit and cash, they are the real drivers. And from what I'm seeing around at the market is the more people that have got a really good handle of this, the better. Now, we can do some analysis reports for this, so we can actually look at your cash cycles. So if you've got a package called QuickBooks or Xero, we can extract the data for you, do some analysis work for it yourself to see where cash is going in and out your business. So we can do this via a few ways. We could do this via what we call a business overview report, where we look at your key ratios. And if you want, I'll give you that free of charge today if you click the link below or drop me a message. If you allow us to sync up to your QuickBooks or your Xero, we will run this report for you. What we can also look at as well is the difference between your profitability and your cash flow. So if again, you're happy for us to sync to your QuickBooks or your Xero, we can run a business review report for you. You can then see on where are things going. Because it's sometimes all it takes is the big difference is with a bit of guidance and allowing yourself the time and the space out your business to look at this objectively, this is where normally the real magic happens. Because you get to extract yourself and put yourself up in the stands or in a helicopter looking down, and you can see exactly where your business is. So again, if I can help you with those reports, please message me or click the link below. Also, if you've got any questions that have come up from this, I'd love to help. So I've put my calendar link below. This will allow you to book an appointment in my diary for half an hour. We can get to know each other, I can take on board any questions, and I promise there'll be no pushy sales pitch.